The wealthiest woman I have ever studied owns exactly one investment. One. Her neighbor owns 12. He has a spreadsheet that tracks every single one. He rebalances monthly. He reads 6 financial newsletters. He checks his phone before breakfast and after dinner. He spends 4 hours every week managing his money. She spends 2 hours a month. He made 7% last year. She made 14. And when he found out, he did not simplify. He went home and added a 13th investment. Now, before you judge him, I need you to understand something. You would have done the same thing. Not because you are foolish, but because your brain has been trained, since childhood, to believe that the person doing the most is the person winning the most. And that training was not an accident. It was installed deliberately by a system that profits every single time you click buy, open a new account, or add another position to your portfolio. Today, I am going to dismantle that system in front of you. I am going to show you where the belief was planted, who benefits from it, and why the psychology driving your financial decisions has almost nothing to do with money and everything to do with fear, ego, and a glitch in your brain that you did not know existed. And I need to warn you about something. About halfway through this video, I am going to ask you a question, a simple question, and your answer to that question is going to reveal whether your investment strategy is actually yours or whether it belongs to someone who is making money from your confusion. You are going to want to be here for that. If you have ever felt like you are doing everything right financially, but still not where you should be, type "system trap" in the comments right now, because by the end of this video, that feeling is going to make perfect sense, and you are going to know exactly who put it there. Now, let me prove something to you in real time. If I told you right now that there is a strategy that could build serious wealth over 20 years, and the entire strategy was this: buy one asset you deeply understand, hold it, and ignore everything else, what would your brain do? Be honest. It would resist. Something inside you would tighten. You would think, that is too simple. There has to be more to it. Nobody builds real wealth from one thing. That sounds like something a person says before they lose everything. That resistance you just felt, that is not wisdom. That is not your experience talking. That is a psychological glitch called complexity bias, and it is running your financial life without your permission. Your brain is literally hardwired to distrust anything that looks easy. It assumes that if a solution is simple, it must be incomplete. If a path has fewer steps, it must be the wrong path. If someone tells you the answer is less, your brain hears danger. And here's the part that should disturb you. That glitch has been the single most profitable vulnerability in your psychology for every financial institution, every investment platform, and every guru who has ever sold you a product. They did not create the glitch, but they learned how to feed it. And every time they feed it, you pay. Because complexity sells, simplicity does not. Nobody is paying a financial advisor 2% of their portfolio to say, buy one thing and hold it for 30 years. They are paying for the illusion that their money requires constant management, constant adjustment, constant movement. The more instruments on the dashboard, the more it feels like someone is flying the plane. But what if nobody needs to fly the plane? What if the plane was already on course, and the only thing the extra instruments are doing is creating turbulence you then pay someone to manage? Here is an image I want you to carry for the rest of this video. It is going to reframe everything that comes after it. Imagine someone standing in a room full of candles, 30 candles, all lit, all flickering. It looks impressive from a distance. It looks like abundance. But step inside the room and you will notice something strange. The total light is dim. Each candle is too small and too scattered to illuminate anything clearly. All you can see are shadows. Now imagine someone standing in a room with a single torch, one flame, focused, concentrated, and powerful. The room is flooded with light. Every corner is visible. Everything is clear. Most investors are collecting candles. They think more flames means more light, but all they are creating is flickering shadows and the constant anxiety of keeping 30 wicks alive. The person with the torch sees everything, and they only have one thing to protect. That's the difference between diversification and focus, and nobody in the financial industry will ever hand you that image because they make their money selling you candles. Type candles in the comments if you just saw your portfolio differently, because what comes next is going to explain how they got you to start collecting in the first place. This is where it gets uncomfortable, because the candle collecting habit did not start in a brokerage account. It started in a place you would never suspect, a classroom. When you were a child, the kid who got praised was not the one who mastered one subject. It was the one who got decent grades across all subjects. Be well-rounded, cover your bases, do not put too much into one thing. That message was drilled into you so deeply that you stopped questioning it. It just became the way things are. And when you grew up and started thinking about money, that operating system came with you. You unconsciously believed that being good with money meant being spread across many things, the same way being a good student meant being adequate in every class. Nobody ever sat you down and said depth beats breadth. Nobody ever told you that nearly every great fortune in history was built from one thing, one obsession, one decision so deeply understood that risk stopped being a fear and became a calculation. That programming runs deeper than logic. It sits underneath every financial decision you make, and most people will live their entire lives obeying it without ever knowing it was installed. But I am not saying this from a distance. I need you to know that. I have been the person with the spreadsheet and the Sunday night portfolio reviews and the 6 newsletters open in different tabs. I have been the person who added a new investment at midnight because someone on a podcast made me feel like standing still was falling behind. I know what that anxiety feels like. It does not announce itself. It does not say, I am fear. It says, I am being smart. I am being strategic. I am being responsible. And that disguise is what makes it so dangerous. The difference is not that I found some secret. The difference is that I eventually stopped moving long enough to ask one question, and that question broke the entire loop open. It is the same question this video has been building toward, and we are getting closer. But first, I need to show you the engine behind the anxiety, because the anxiety is not random. It was manufactured, and the manufacturer has a name. It is called the illusion of control. Right now, think about your investment portfolio. Not the numbers, the feeling. How does it feel to manage it? Because I already know the answer. It feels like spinning plates on sticks while someone keeps handing you more plates and telling you that is what success looks like. Here's what's actually happening in your brain every time you make a move. When you rebalance your portfolio, you feel in control. When you check your crypto wallet, you feel informed. When you read an article about emerging markets and shift 2%, you feel strategic. Every single action sends a small hit of certainty to your brain, a microdose of I am doing something. But here's the contradiction that will quietly destroy you if you do not catch it. The market does not care that you did something. The market has never once in its history rewarded someone for being busy. The market rewards conviction, patience, and understanding. 3 things that become biologically impossible when your attention is shattered across 12 different positions, demanding 12 different kinds of knowledge you do not have time to build. You are not managing your investments. Your investments are managing you, and the exhaustion you feel on Sunday nights is not the cost of building wealth. It is the cost of performing it. Type I see it in the comments if that just described your week, because the next part is going to show you the one emotion that makes all of this inescapable. Now let me show you the engine underneath the engine, the thing that powers the illusion of control, the complexity bias, and every bad financial decision you have made at 2 in the morning. It is not greed. It is not even fear of losing money. Those are surface level. The real driver is something your body recognizes before your mind does. It is the fear of being excluded, and it operates below conscious thought. Here's exactly how it works, and I want you to notice if your body responds while I describe it. You are scrolling social media. Someone posts a screenshot of their crypto gains. Immediately, something happens. Not in your mind, in your body. Something tightens in your chest. Your jaw shifts. A thought that isn't even a complete sentence. It just says, I missed it. Your brain is no longer evaluating whether that was a good investment. Your brain is calculating how much you would have made. It's replaying the moment you first heard about it and chose not to act. It's constructing a story of regret in real time. And within hours, you're researching how to get in, not because you understand it, not because it fits your plan, but because the pain of being on the outside is more powerful than any logic you possess. Now, here's the part that should genuinely alarm you. Your brain processes social exclusion in the exact neural region that processes physical pain. The anterior cingulate cortex fires identically whether you break your wrist or whether you see your coworker making money from something you don't own. Your nervous system literally cannot distinguish between a physical injury and a missed trade. That is not a metaphor. That is a brain scan, and the financial system has spent billions of dollars learning how to trigger that exact circuit. Every push notification about a stock hitting a record, every breaking alert, every headline that says this asset surged 40% today, it is precision engineered to activate the pain of exclusion, to make standing still feel like bleeding, to make patience feel like punishment. And so you add another investment, another position, another candle in the room, not because it serves your strategy, but because it stops the bleeding for a few hours. This is the loop, and once you see it operating in your own behavior, I promise you it will never be invisible again. But the loop needs a face, so let me show you one. There is a man I will call Daniel. He is not one person, he is a pattern, and there's a strong chance he is sitting where you are sitting right now. Daniel is 42, good income, started investing in his late 20s. Over 15 years, he built what looks like an impressive portfolio: index funds, individual stocks, a small crypto allocation, 2 rental properties, a REIT position, some peer-to-peer lending, a stake in a friend's startup. On paper, Daniel is the picture of a sophisticated investor. In practice, Daniel has not slept well on a Sunday night in 3 years. He spends 4 hours a week on it, 6 newsletters, checks his portfolio before he brushes his teeth, has a spreadsheet he updates every Sunday like a compulsion he has stopped trying to explain. His total return over the last decade? About 7% annualized, which sounds fine until you realize it is almost exactly what he would have earned if he had put everything into a single index fund, deleted every app, canceled every newsletter, and spent those 4 hours a week doing literally anything else with his life. But here's where the story cracks open. His neighbor, a woman named Grace. 12 years ago, she bought 1 rental property. 1. She understood the market, she understood the math, she understood the trajectory. She bought it, placed a tenant, hired a manager, and then she did the thing that made Daniel's eye twitch when he heard about it. She did nothing else. No second property, no crypto, no brokerage account, no newsletters, no spreadsheet, no Sunday night rituals. That 1 property has appreciated dramatically. The tenants paid down the mortgage, the cash flow grew every year. Her return? North of 14% annualized. Daniel has 12 investments and a ritual. Grace has 1 investment and a life. Grace is wealthier. Grace sleeps better. Grace is free. Now pause, because your brain is about to do something predictable, and I want you to catch it in the act. Your first reaction to Grace is not admiration, it is defense. She got lucky. That is too risky. 1 property? Come on. And your second reaction, and this is the one that reveals everything, is not to simplify your own approach, it is to add real estate to it. Not subtract, not consolidate, add. Your brain just heard a story about the power of less, and its immediate response was more. That instinct has a name. Psychologists call it additive bias. When humans face any problem, we default to adding rather than removing. Subtracting requires conscious effort your brain actively resists. You are wired for accumulation the way you are wired for breathing. It happens without permission. And in investing, this bias is silently catastrophic, because every time you encounter a better strategy, instead of replacing your current approach, you stack the new idea on top of the old mess. You do not simplify, you fossilize. Type guilty in the comments if you just caught yourself doing exactly that, because the next thing I'm about to show you is going to make you angry at a system you have been trusting your entire adult life. Every investment you have ever added out of additive bias cost you more than a fee. It cost you attention, a fragment of focus that could have gone to the one thing that was actually compounding. It diluted not just your returns, but your understanding. And here's the number that nobody in finance will ever calculate for you. The compound cost of fragmented attention over a 30-year investing career dwarfs every fee, every tax, and every bad trade combined. There is no app that tracks it, no dashboard that shows it, no advisor who will warn you about it, because the moment you see it clearly, you stop being a customer. Now, who benefits when you add another investment? Not philosophically, literally, who gets paid? When you buy a mutual fund, someone collects a management fee. When you buy an ETF, someone collects an expense ratio. When you open a brokerage account, someone earns from your order flow. When you invest through a platform, someone charges an origination fee. When you trade crypto, someone takes a transaction fee. When you hire a financial advisor, someone takes a percentage of everything you own every single year, whether your portfolio goes up, down, or sideways. Every new investment you add generates a fee. Not for you, for them. The average investor pays over $150,000 in fees across a lifetime. And here is the line that should make your blood cold. The primary function of those fees is to fund the system that convinced you to generate them. The financial industry does not make money when you sit still. It makes money when you move. Your anxiety is their revenue. Your confusion is their business model. Your complexity is their product. Every rebalance is a transaction. Every transaction is income. Every moment of doubt that drives you to adjust something is money flowing from your account into theirs. The system does not want you to find one investment and hold it for 30 years. That is the single worst outcome for their balance sheet. They need you in constant motion. They need you overwhelmed. They need you confused, because confused people click buttons, and every button is a toll booth. This is not a conspiracy theory. This is a business model, the most successful business model in modern finance. And its masterpiece is this. It convinced you that the complexity it sells is intelligence, that doing more means knowing more, that 15 positions is smarter than one. When the reality, almost without exception, is the reverse. The person doing the most is almost always the person who understands the least. But the system has one more trick, and this is the one it is counting on right now while you watch this video. This is the layer that protects all the other layers. It is not about money, it is about who you think you are. I need you to be honest with yourself for the next 60 seconds, not investor honest, human honest. Have you ever mentioned an investment in conversation not because someone asked, but because you wanted them to know you had it? Have you ever felt a pulse of pride when you told someone you were in crypto, or that you had rental properties, or that your portfolio was complex? Have you ever described your investments using words that made them sound more sophisticated than they are? If yes, then this is what is actually happening. You are not building a portfolio. You are building a character, an identity, the serious investor, the person who is on top of things, the person at the dinner table who knows things other people do not. And the system feeds that identity like oxygen. Every new position is not just a financial instrument, it is a prop in the performance, a new line in the story you tell at dinner parties, a new credential that says, I am not the kind of person who puts everything in one place. I am more sophisticated than that. But underneath the performance, and I need you to go here with me because this is the room most people refuse to enter, the engine driving those decisions is not strategy, it is terror. The terror that simplicity exposes you, that having one investment makes you look naive, that people will think you do not know what you are doing, that the person at the table with 12 positions will silently judge you for having one. That fear has been curating your portfolio for years, and nobody makes a cent by curing it. Type exposed in the comments if that just landed somewhere you were not ready for. Now, here's a contradiction that is going to sound wrong when you first hear it. Stay with it for 10 seconds before your brain rejects it. The person who appears to be taking the most risk, the investor with everything in a single asset, is often taking the least risk, and the person who appears to be the safest, the one spread across 20 positions, is often the most dangerously exposed. That sounds backwards, but think about why. True risk is not how many things you own. True risk is how little you understand about what you own. And understanding has a hard limit. It is inversely proportional to the number of things computing for your attention. Spread yourself across 20 investments, and you have shallow knowledge of all of them. You know what each one is, but not how it works, not when it will fail, not what drives it. You are not diversified. You are uniformly ignorant. Focus on one, and you build the kind of depth that turns risk into something completely different, not a gamble, a calculation, an edge. Here's a fact that the diversification industry will never advertise. Diversification was never designed to build wealth. It was designed to preserve it. It's a preservation tool, not a creation tool. And the vast majority of people using it are in the building phase, not the preservation phase. You are playing defense before you have ever scored. You are protecting money you have not yet made, and the system applauds you for it because defense requires more products, more fees, and more of your attention than offense ever would. Type build first in the comments if you just realized you've been playing the wrong game. And now we're here, the question I promised you at the beginning. I want you to look at your portfolio right now, not after the video, not when you have time, right now. Every fund, every stock, every property, every crypto position, every speculative bet. Now answer this. If you could only keep one, if you had to sell everything else today and concentrate everything into a single holding, which one would you choose? Let the answer form. Do not rush it. Now here is why that question is the most dangerous question in personal finance. Your answer reveals what you actually have conviction in, and the distance between that answer and your real portfolio reveals exactly how much of your financial life is driven by understanding versus how much is driven by fear. For most people, that distance is enormous, and that distance has a price tag. There is a second part to this test, and it cuts even deeper. For every investment you hold, can you answer 4 questions in 60 seconds? Why do you own it? What drives the returns? What are the risks? What would make you sell? If you cannot answer all 4 for even one of your holdings, you are not investing in it, you are hoping in it. And hope, wearing the costume of strategy, is one of the most expensive things a human being can do with money. Most people cannot pass this test. That is not a personal failing. That is the system functioning exactly as designed. The system needs you in a state of partial understanding, just enough knowledge to feel confident, not enough to ever be still, because clarity is the one thing the system cannot monetize. Clarity means you stop buying. Clarity means you stop trading. Clarity means you sit down, shut up, and let compounding work. And every moment you sit still is a moment the system earns nothing. Confusion, on the other hand, confusion is the most profitable psychological state in the history of capital markets. Type clarity in the comments if your portfolio just failed the test. I hear from people every week, and the most common message is never about which investment to pick. It is always the same 6 words. I feel overwhelmed and stuck. That sentence is not a financial problem. It is a psychological symptom of a system doing exactly what it was built to do. keeping you moving fast enough to feel productive, but scattered enough to never build real velocity in any single direction. The cure is not another investment. The cure is the removal of almost everything that is not working. So let me leave you with the thing the system will never tell you. This is the final piece. The wealthiest people you will ever encounter are not the busiest investors, though are the calmest. There is a stillness about their financial lives that looks irresponsible from the outside. They do not check markets daily. They do not react to headlines. They do not pivot every quarter. They do not collect candles. They found their torch. They understood it in a way that made every headline irrelevant, every notification ignorable, and every market swing a data point rather than a crisis. And then they did the hardest thing in modern investing. They stopped. Not stopped caring, stopped moving. They let time compound their money, their understanding, their conviction, and their peace of mind simultaneously. And that compounding across all 4 dimensions is what separates generational wealth from the performance of being wealthy. That stillness is not passive. It is the most difficult act in modern finance because it requires you to resist every impulse the system has spent your entire life installing, to sit still while everyone around you moves, to say no while every notification screams yes, to look at a world that worships complexity and choose the thing that nobody is selling. Focus. Not stock picking, not market timing, not finding the hidden gem before everyone else. The real skill is making one decision with full understanding and then protecting that decision against the endless noise that tries every single day to pull you away from it. And the strangest part? Right now, even after everything you have heard, a small voice in your brain is whispering, "But what if she's wrong? What if I really do need 12 investments? What if simplifying is the mistake?" Listen to that voice carefully, because that is not your intuition. That is the system talking. That is the programming, still running, disguised as caution, disguised as intelligence, disguised as you. It will fight you every time you consider selling a position you cannot explain, every time you think about consolidating into the one thing you actually understand, every time you feel the itch to open a new account. The programming will tell you that less is reckless, that focus is foolish, that the smart move is always to add. And every single time it whispers that, someone somewhere earns a fee. So here's the only question that matters. Are you going to keep collecting candles, or are you ready to find your torch? Type focus in the comments if you're done letting the system run your strategy. Type one thing if you're ready to bet on depth over noise. And if this video showed you something about yourself you were not expecting to see, send it to the person in your life who is drowning in a portfolio they cannot explain. Because the most powerful financial advice you will ever give is not a stock pick, it is permission to simplify. I'm Diana Invest. This is where psychology meets money. Stay focused, stay convicted. I'll see you in the next one.